Good morning and welcome to the Propeller Club of Northern California. I'm Stas Margaronis, and we have as our guest my good friend Lars Jensen, who is going to be speaking to us about the global container situation. Lars, I'm very pleased to have you. And before we get started, we are going to have our introductions, and then we will go into the main event. So let me start with introducing my good friend and comrade in arms, Mr. Todd Crawshaw, and then we will go down the list and introduce everybody, and then we'll get started with Lars. Todd, good morning.
Good morning, all. Todd Crawshaw, Crawshaw Design. We provide integrated brand marketing for print and web and website hosting, IT support.
Great. Aaron. Aaron, do you want to introduce yourself?
Oh, hi, Stas. Sorry, just now getting on a little late. Hi, my name is Aaron Dehart. I'm a Voyage Performance Director here with Storm Geo, based out of California.
Great. Good to have you, Aaron. Thank you.
Good to be back.
Thanks. Sung Lee.
Hi, this is Sung Lee. I'm a licensed custom broker and advisor to the Department of Commerce.
And I ate at your table at the CB Fang event last week.
Yes, thank you for coming with us. That was great.
I had a great time, Sung. Thank you very much. Andy Wong. Andy, good morning.
Good morning, everybody. Andy Wong, Cargo Sprint / eModal. Always happy to be back, on these PCNC calls. Good to see you, old friends.
Thank you very much, Andy. Captain Ann McIntyre. Captain, good morning.
Good morning. Nice to see everyone. Ann McIntyre from the Bar Pilots.
Ann, thank you very much for being with us. And we are going to hear you next week on the 12th at Scott's Seafood. Looking forward to it.
Yes, you will. I hope everybody is able to make it, and looking forward to the luncheon.
Very good. Evie Wong. Evie, good morning.
Good morning, Stas. It was nice to see you at our State of the Port last week. Hope you liked the new venue.
I did like the new venue. I thought it was great, Evie. I thought they did a really good job, and I liked the hotel. It was just neat. It was very nice, and thank you for having us. You did an excellent job doing the emceeing. You were very eloquent.
Oh, it's nerve-wracking. Oh my gosh. Anyway, I'm always afraid of misspeaking, but when forced to do it, you have to do it, right, Stas?
Yeah, when you don't have a choice, you don't have a
You don't have a
choice.
choice. But anyway, thank you. We had a nice exchange with acting port director Jason Adams, and good interaction from his team, as well as a good overview with the surety partners that we have, which 2025 impacted everybody, right? So yeah. Anyway, Evie Huang with Customs Brokers, Forwarders, and Association, Northern California. Thank you, Stas. I look forward to seeing Ann McIntyre next week as well. And a proud member of the Propeller Club as well. Thank you, Stas.
Thank
I
you,
knew
Evie.
you were going to say.
And you're on the front line of the trade war too.
Well, John is also, and so, but we all are, right, in different parts of it. And I really appreciated what Susan Ransom with SSA said about appreciating our Customs Border Protection, which is different than Customs Border Patrol.
Yeah.
That they are on the front lines in facilitating trade and security also, but cargo facilitation, we don't want them to forget that. And he made some good comments about supporting that. And of course, they're right now waiting for the appropriations bill going through the House today. So lots going on. So look forward to seeing what Stas will say about all that.
Okay,
Stas, Lars.
Okay, thank you very much. Steve Schlinkert.
Hi, Stas. Good to see you.
Good to see you. Why don't you introduce yourself, Steve?
Yeah, sure thing. Yeah, my name's Steve Schlinkert. I'm an assistant manager in the Voyage Performance Services Department at StormGeo. Some others from my company are here today as well. But it's great to be here. Thank you for the invitation.
Thank you. Good to have you, Steve.
Sure thing. Thank you.
Okay. Greg Feeney. Greg, good morning. Greg. Greg going once, Greg going twice.
I think he's muted.
I think he is too. Greg, get yourself unmuted.
There. Is that better?
Yes. Good morning.
Good. But now the video's gone. Okay. Anyway, Greg Feeney for Port Transfer here in Oakland, California. We do cross-dock, a lot of transload and warehousing, and a lot of our products are ag-based. So anything that Trump does that affects ag, we feel it pretty fast. And hopefully things will improve in the next 60 to 90 days. But it's amazing how our supply, our customers shifted from China to India, now to Africa and to Venezuela for their shipments of ag products. So crazy market right now.
Thank you very much, Greg. Appreciate that. Kevin Jones, good morning.
Good morning, Stas. Good morning, everyone. Kevin Jones, Port of Oakland Maritime Marketing.
Thank you for being with us, buddy.
Thank you.
John Carlier, Captain, good morning.
Good morning, Stas. Thanks for hosting this. And John Carlier from the San Francisco Bar Pilots.
Good having you. Lars Jensen. Lars, good morning.
Good morning, or rather good evening from over here in Denmark.
Okay, we'll talk to you soon. Matthew LaFiandra. Matthew, good morning.
Morning, everybody. Matt LaFiandra, Ocean Solutions. Always excited to hear what Lars has to say, since always involves international dynamics, which are super interesting to me.
Very good. Thank you very much. Mike Swan, did we already introduce you?
Not yet. I logged in a little late. So yeah, I'm Mike Swan. I work with StormGeo in the Voyage Performance Department.
Great. Thank you. And good having you with us, Mike.
Thank you.
Ron Brown. Mr. Brown, good morning.
Good morning, Stas. Good morning, everyone. Ron Brown with the Maritime Marketing Group at the Port of Oakland. And Stas, I will see you at the World Ag Expo.
Yes, sir. Thank you very much, Ron. Susan Ransom, good morning.
Good morning, everybody. Susan Ransom, SSA Terminal, and proud member, board member of the Propeller Club, Northern California. And hi, Lars. I'm looking forward to hearing from you.
Thank you, Susan. Tina Tan. Tina?
Hi, can you see me now?
Yes.
Hi, everyone. I'm Tina Tan from Ready Warehousing and Logistics. I'm based out of New Jersey. I'm a trucking warehousing company. And nice to see you, everyone here.
Thank you very much, Tina.
Thank you.
Kevin Bolger, I see you.
Thanks, Stas. Kevin Bolger, Managing Director for KLN Americas.
Thank you for being with us. Tony Petronio.
Good morning, Stas. Good morning, everybody. Tony Petronio, Operations Director for Routing Advisory Service at Storm Geo. And Lars, I've been looking forward to this talk for a while now, especially with given all the situation that we're in right now. So really looking forward to hearing you today.
And the news actually got worse this morning, Tony. So Lars will tell us in just a second. Did I get everybody? Has everybody been introduced?
No, Lars.
Oh my goodness! How did I miss my leader?
Brian Parker just joined. So, good morning, Stas, and good evening, Lars. Brian Brandis, the Maritime Director for the Port of Oakland.
Thank you very much. Brian, just for everybody, we will have a recording of the meeting, and we will be distributing that to everybody who's on it. So you will get that recording probably tomorrow. Brian.
Good.
State of the Port of Oakland tomorrow. We're really excited. Good seeing you. Thank you for all of your good work at the Port of Oakland. And we'll be very happy to hear what's going on tomorrow. And for anybody who doesn't know, State of the Port of Oakland is tomorrow at Scott's Seafood. Brian will be a prominent participant at that event. And hope that all of you can make that.
Thanks, Stas.
Thank you. Anybody else that I did not get? Going once?
Yeah, Alex Butler. I'm with the American Maritime Officers Union. I'm the West Coast representative and a deep sea master mariner, 25 years in the industry. So glad I can join and to lean in and learn more.
And you're a board member of the Propeller Club of Northern California.
That's right. Thank you so much.
Thank you very much. Kevin Policarpo. Kevin, good morning.
Morning, boss, and good morning to everyone else. My name is Kevin Policarpo. I'm Mr. Margaronis' research assistant.
Thank you, Kevin. Okay, have I got everybody? Going once, going twice. Okay, thank you all. Lars Jensen has always provided us with very valuable insights into what is going on in the global container market. We are very grateful that he can find the time to meet with us. We do this on an annual basis. It's one of our prime events at the Propeller Club of Northern California. Lars's reputation almost does not need an introduction. He covers a lot of ground. He stays on top of a lot of different issues. And Lars, good morning from California. Good evening in Denmark. Welcome, and thank you for being with us.
Well, thanks a lot for having me here, Stas. It's always great to be on these events. Let me just find something to share with everybody here. Bear with me a second. So let me know if you can see my slides. They should be loading up now.
We can see it, Lars.
Perfectly. Let's take it away. As you can probably guess from my choice of starting image here, I am not going to talk about smooth waters here for 2026. Without further ado, let's jump into it. Let me first add a few words on the US trade war, and then I'm going to come back a little bit later in the presentation what the effect has been so far when we actually look at the numbers. But to kick us off, here I'm applying not just a US view, but also the view I very clearly see from across the world, all the different countries I travel around in, the different companies I work for. When we're looking at the US trade war, we could spend a lot of time making a long bullet point list of all the changes. These are just examples from the last 3 to 4 weeks, with threats on 25% on anyone dealing with Iran, whatever that means, an increase suddenly on tariffs on South Korea, threats of 100% on Canadian goods out of the blue again, 200% on French wine, tariffs on anybody dastardly enough to sell oil to Cuba. And the list is actually longer than this. My point in this is the way this is now being perceived is, to be quite blunt, nobody's really taking it serious. This is now being seen as almost It's not quite a daily, but an occurrence that happens multiple times a week, unless this actually comes out in an executive order or as an actual rule. To be really honest, nobody cares anymore. This is taken as noise. That doesn't mean that it doesn't have any impact. It absolutely does have impact on container markets related to the US, but solely related to the US. So I'm going to come back to that later when we're going to look at the numbers. But for now, it's simply not meaningful to look at what are the announced potential changes in tariffs, because tomorrow morning that might have changed. It might even change during today. So before we get to the numbers, I want to jump into the Red Sea crisis. Let's start with a bunch of the good news. The good news is the baseline is almost of an imminent reopening. As you can see in red, there was actually news coming out today. Let me revert to that in just a second. But the development in recent months has been, ever since there was the ceasefire between Israel and Hamas, there's also been a ceasefire with the Houthis. There's been no attacks on ships since September. That's definitely good news. CMA CGM was ramping up the number of services over the year. They cannot really be taken as an indicator for the wider market, because CMA CGM, unlike the other global carriers, do not service Israel, which means they are not a target candidate for the Houthis. That matters in the region. What really matters as a pickup here was the indication we got in mid-December from Maersk, sending through first a test vessel, another test vessel here in January, and then came the announcement just about a week ago that their MECL service, which is the one that goes between US East Coast and the Middle East, will now permanently go back through a Suez routing, actually starting as of this week. All of that was really news that seemed to tee up the ball for an imminent reopening. What I have also been pointing out for the last couple of months, if we disregard what the Houthis may or may not do and ask a different question, if we had free choice, if you are a carrier, what would be the best time to make the transition? And keep in mind, when the transition happens, the first vessels to go through the Red Sea will take a shortcut compared to the vessels that are already halfway around Africa. So these vessels will then converge up in Europe and for a while create massive port congestion problems. That is inevitable when you shorten the supply chain by a couple of weeks. Therefore, the best time to do the transition would actually be after Chinese New Year. After Chinese New Year, as we all know, Chinese New Year is mid-February this year. So the last 2 weeks of February, we will always see a huge drop in export volumes. There will still be low volumes by the first week of March. If I was a carrier, that's what I would aim for. The first 2 weeks after Chinese New Year, the ones that are really, really lightly loaded, I will still send those around Africa. First week of March, I will start to send them through the Red Sea, because they would then meet up in Europe with the lightest possible load seen over the full year. We will still have congestion problems in Europe, but we will minimize the impact of this by that timing. So that has been basically the base case here for a couple of months, that after Chinese New Year, we should begin to see this. Then here this morning, European time, there's an announcement coming from Maersk and Hapag-Lloyd that they will, here in mid-February, take their India to Europe service. And from mid-February, it will now permanently go through Suez. That's the first Gemini service we see. And they also announced that 2 of their Asia-Mediterranean services, that's the ones that Hapag-Lloyd calls SE1 and SE3, Maersk have different names for it, they are the next ones to also shift. They haven't put the dates on yet, but to me, it seemed pretty clear that this is also something that is likely going to happen, and that would fit nicely into the timeline of this actually coming to fruition in the wake of Chinese New Year. All of that looks positive, and the base case should still be that the transition begins in earnest here from the beginning of March. Now comes a slight fly in the ointment. We had a threat or propaganda video come out from the Houthis just a week ago. Actually, they had 2 videos they released. One was a 9-minute video in very great detail showing the attack they did on the UK vessel Marlon Luanda about a year ago. But the more important one was an 18-second video they launched. Very, very nicely done, if we have to look at it from that perspective. First, an image from above of a container vessel moving in smooth waters. Fast clip to a warship. Fast clip to somebody looking at nautical chart. Fast clip to a vessel on fire. fading to black with the words soon, and that's it. If you follow the political communication from the Houthis, what they are aiming at here is basically a warning. Keep in mind, the Houthis are allied with and supported by the Iranian government. So it's a warning if the US intervenes in Iran to topple the government, the Houthis will start shooting at ships again. And the problem here being, as I mentioned, Maersk is switching their Mekl service back. The Mekl service is unique in Maersk's network. It is almost solely operated with US flag vessels. So if the Houthis were to suddenly start shooting at ships again, the absolute best targets for them to go for would be the Maersk US flag vessels moving through that region. That is the risk. So we have to look at Iran to say, well, what is the potential risk here? There's been massive riots. We have seen riots in Iran many times before over the last 40 years. At the end of the day, the regime has always won. And this might also very well be the case this time around. We don't know. If there is this US intervention, the Houthis might actually start shooting at ships again. They have at least alluded to as much. On the other hand, if the regime falls in Iran, that means that both supports of material and support of money to the Houthis will dry up from one day to the next. This will actually stop the Red Sea crisis relatively quickly. What is important here is what has transpired, as far as I can see, over the last 1.5 to 2 hours. Because within the last couple of hours, first we had the Iranian Revolutionary Guards sending out vessels beginning to harass a US flagged, US crewed tanker in the Strait of Hormuz. Subsequent to that, that must have been 30, 60 minutes ago, US forces shot down an Iranian drone that was moving aggressively towards a US aircraft carrier. So this is something that's unfolding right now. If this escalates further, we might actually be into the scenario where the Houthis will start shooting at ships again. Let me remind you, the base case scenario is that this doesn't spiral out of control. We are looking at an imminent opening of the Red Sea. But if the Houthis now start shooting at ships again, any hopes of reopening needs to be postponed at least 6 months further into the future. So that's basically where we are right now with the overall Red Sea crisis. Let's just stay for a minute on the play out if we go through with the baseline and the Red Sea reopens. Because that's going to lead to massive turmoil in the markets. It's going to then ripple out to all other trades. If we measure global demand, not in TEU, but in TEU miles, this is what's going to happen. You can see how TEU miles grew dramatically at the start of the Red Sea crisis, obviously, because we needed to move the same containers a much longer distance. This, of course, also logically means that when the Red Sea reopens, TEU miles is going to drop. So we're looking into a year of minus 12% year-on-year growth based on TEU miles. Another way to look at it would be to say we're going to get a release of potentially as much as 12% capacity out into the market. That is definitely going to lead to overcapacity. I have a more of how much overcapacity that will be. But this is purely mechanical. This will happen if the Red Sea reopens. How will the carriers react during this transition? The carriers have said as much, and I'm actually believing them in that as well. They are planning to do a slow, orderly transition. If you spread this transition out over at least a couple of months, you can reduce quite a bit of the resultant problems you're going to see up in Europe with congestion if you spread it out slowly. That's what the carriers will try to do. They are also, to some degree, likely to fail, not of their own accord, but because of shipper actions. More on that on the next slide. When we then get this port congestion in Europe, that means completely erratic schedules. Vessels will arrive in congested ports. They will skip ports, trying to find other ports that are not congested. Then those ports will be congested. Basically, a game of whack-a-mole will ensue. Because this is port congestion, it will instantly also impact everything on the Atlantic trade, Europe-South America, and Europe-Africa trade. And this is where we're then going to have a ripple into basically all trades in the world. There can be a little bit of this effect on the US East Coast as well. If you look at the US East Coast, about half of the tonnage coming there comes via Panama. The other half comes right now around Africa. When that gets shifted up to Suez, there's going to be a little bit of a spike coming into the US East Coast ports as well. During this transition, because port congestion will reign supreme, reliability is not going to matter to the carriers at all. I have more slides in a second on what that means in numbers. But in terms of the shippers, when this begins to open, shippers will suddenly have a choice. Will I book my cargo, let's say from Shanghai to Rotterdam, in the service that goes around Africa, or one of the few ones that goes through Suez? The difference in transit time will be at least a couple of weeks. And it's pretty obvious that most shippers will favor the much shorter route. If the carriers try to do this in a slow and controlled manner, that means we'll be in the situation where there will be more demand than supply on the Suez route. This will cause rates to spike rapidly. Here I'm just illustrating how rates have been spiking over the last couple of years. Carriers have owned their skills. They've become very good. Even if you just for a week or two have excess demand, they can push rates up by thousands of dollars, more or less overnight. So once we start to see a slow reversal to the Red Sea, we could also suddenly see a price spike on the Red Sea, but not around Africa. This will quickly push the carriers to move more vessels away from the Africa route over to the Red Sea route, causing a more rapid transition than we otherwise would have seen. And then we're going to get the congestion problems in Europe. These congestion problems will take several months to also work through. So this is going to be with us all the way through summer and into peak season in Europe, impacting again also Atlantic services, South American services, and everything else that basically moves. As I mentioned, reliability is going to suffer. This is a view at what happened when the Red Sea crisis originally began. Left-hand side is the impact it had on global reliability, right-hand side being specific on the two Asia-Europe services. And reliability on the Asia-Europe services dropped to below 35% basically within a month. And globally, that also meant a drop almost down to 50%. Coming back up, that really only happened when the new alliances came into place during spring 2025. Strictly speaking, the carriers could have done it earlier. My honest view is they couldn't be bothered for the simple reason, why would you spend a lot of effort in improving the quality of a product you know you're going to phase out anyway because they were going to transition to new alliances? Schedule reliability will go completely out when ships will and will not arrive. This is to give a somewhat longer term view on what has happened on reliability. We used to be in a market where it's between 70 and 80%. You have some trade lanes that are typically higher, some are typically lower. We all know the calamity of all the pandemic disruptions. Then we had a reversal coming into 22, 23. We had the Red Sea crisis. Now we had a partial normalization in 2025. But as you can see, we have not gotten anywhere near the reliability we used to have. And with a Red Sea reversal, that's not going to happen until at the earliest towards the end of 2026, perhaps only as we get into 2027. So reliability is going to be shot for quite a long time. Now, I promised to look at some of the data underlying what is the concept of the US trade war. Left-hand side here is the year-on-year growth of global container volumes. I split it into two specific buckets. One includes all cargo related to North America. So that's both imports and exports. The orange line is containers moved anywhere else in the world for anyone else between all the other 192 countries in the world. And the effect of the trade war is very visible, very instant. The moment after we saw the so-called Liberation Day, these two curves bifurcated completely. What we have seen during the trade war is the rest of the world has been growing basically twice as fast as what could be expected under the economic conditions. This is extremely strong growth basically throughout most trades in the world. North American trades have been underwater ever since. This is for both imports and exports combined. As you will see in a minute, this is pulled down by imports, mitigated somewhat by the exports. It also shows that as a consequence of the trade war, the share of volume attributable to North America of the global volume is also in a rapid decline. So very simple. All of the world has been doing fantastic when it comes to container volume growth in 2025. Only exception is the US, and that happened right after the start of the trade war. If we dig into the individual regions and look at export growth and import growth, these are the newest stats available. It's based on cargo load, and that's for November year on year. If you look at imports, North America is the only region that has gone backwards in import volumes. Everywhere else growing strongly. If we look at export growth, at least there has been export growth also out of North America in November. No match really to Far East and Indian subcontinent. We can also broaden this view. This is a snapshot of November. If I instead take a look at the entire period from April to November, and again, I use April to November because the trade war was started in April after Liberation Day, we can again see how North America is the only region with a substantial decline in container volume, whereas everyone else has been growing. Exports, North America, still doing somewhat okay, at least containerized, whereas Europe has actually been pretty anemic. But Europe has been anemic on export growth, not just during this period, but Europe has been anemic on export growth basically for the last 2 to 3 years. We can also look at some of the individual trade lanes. And again, this is the full trade war period, April to November. The trade lane with the absolutely strongest growth is Far East to Africa. Why that is, I'm going to come back to a little bit later. North America to Africa is the second highest, but that doesn't really matter much globally because the volumes on that trade lane are almost zero. Most of these trades are then Middle East, Indian subcontinent to Africa. It's Far East to Middle East. So it's a lot of the areas surrounding Far East, Middle East, Indian subcontinent, and Africa that are some of the core drivers of the really strong growth we're seeing. If instead of looking at the top 10 trades, we're simply looking at the usual major traditional trades, the Pacific trade clearly stands out, down 7% year on year from April to November, which is a substantial decline on the Pacific. As I mentioned, European exports are also anemic, in this case, slightly more than 6% decline, but that's a backhaul. On the really strong growth part, we have Far East to Europe has been growing more than 9% in this whole period. This is phenomenal growth for the Asia-Europe trade. We've also seen North American exports to Europe growing at around 10%. So this is where we are on the numbers and in terms of the bifurcation we are beginning to see in the trade. If we look structurally a little bit further into the future, and this is my view on what is the excess capacity. Mind you, this takes into account deliveries of new ships. It includes a relatively conservative baseline of global growth around 3%. It includes an assumption that 2026, we will see a resumption back to the Red Sea. It includes an extremely aggressive scrapping assumption that we're going to scrap all ships older than 20 years. It's unlikely to be that much, but that's to put in an aggressive scrapping target. Even with all of this, you can see we will for sure have excess capacity globally in 27, 28. This will be the apex of a normal cyclical downturn. You can see how this basically matches also what we saw back in 2015, where in 2015 we had a market cyclical downturn. You can also see how it will not be an out-and-out disaster like after the financial crisis back in 2009. But mind you, this is to some degree going to happen. What can the carriers do to mitigate this overcapacity? Well, as I said, this already includes an aggressive assumption on scrapping. It's unlikely they're going to scrap more, likely they're going to scrap less. Because if you look at all the ships more than 20 years old, most of them are small feeder and regional sized vessels. If we scrap all of those, we won't have enough. So it's unlikely they will actually all be scrapped. Carriers can, of course, slow down vessels to some degree, which they're very likely to do, but that's been par for the course over the last 15 years. It is also likely, even with a Red Sea reopening, that some of them will continue to operate services around Africa on the backhaul going back to Asia, simply to absorb some of this overcapacity. But overcapacity, we will certainly see. Will that then lead to a price war? Offhand, yes, there's going to be a few drivers. One of the drivers is basically the carrier's own order books. These are just the 10 largest carriers in the world, and you can see what their existing fleets are, what their order books are, what their shares are. Most of these carriers have order books now in excess of 30% of their own fleet. In some cases, the order book is in excess of 40% of their currently operated fleet. This is not just for fleet replenishment. They are going to try to grow aggressively, at least some of them. That would be one driver of a price war. Can we be sure the carriers will embark on a price war? Now, mind you, it's not necessarily certain we get the price war here in first half 26, because if we open the Red Sea, we're going to get the European port congestion. That will actually force rates up while we're in this transition period. But once the market stabilizes with new services through the Red Sea, we will get into a price war. Every single cyclical downturn for the last 40 years have always led to a price war. It would be unwise to think this time is any different. I have seen the argument fielded that because the carriers are now much more consolidated, that they would be less prone to do this. And that argument has merit, but doesn't stand up to the data, because we can just look at 2023. 2023, the market was basically as consolidated as it is today. And when we began to see overcapacity, we instantly saw a price war. And by fourth quarter 2023, before the Red Sea crisis, all the carriers were loss-making. So we are highly likely to see them embark on a price war. One thing is different in this price war compared to any other price war in the past. The difference is the carriers have got money. All price wars in the past was in an environment where none of the carriers actually had money. And you might then wonder, why would you then embark on a destroying price war if you don't have any money? That's very simple. When you don't have money, the most important thing is you need to have enough cash flow to stay alive. You need the cash flow to pay your salaries, to pay your charter ships, to pay your bills, to, so to speak, keep the ship afloat for a better day. And when cash flow is king, I don't really care whether my balance sheet says I'm running at a loss, as long as I get some money in today so I can pay my bills. That was one of the fires that fueled all of these price wars. That's different now. The carriers have a lot of money coming out of 5 years of bonanza. You can, of course, make the argument because they got more money, the coming price war will be deeper and longer than anything we've seen before. That is certainly possible, but I'm not sure that's actually going to be what happens. Because the carriers have money, they are not as dependent on cash flow as they were in the past. For the first time, a carrier actually has the ability to make a choice. They have the ability to say, yes, this is now a destructive price war. You know what? I'm going to put 30 ships at anchor. I'm not going to sail them for the next 6 months. Sure, that's going to cost me money too, but I don't really need the cash flow to stay alive the way I did in the past. I think we're going to see a mix of the two. I think we're heading into a period that is going to be enormously volatile. You're going to see price wars, but the price war will then stop faster than usual because carriers will then begin to lay vessels at anchor. Markets will rectify themselves. But when that has happened, then the carriers will start sailing some of the ships at anchor. The price war will resume. So you're going to have a couple of years of an extremely unstable market dynamic playing out. If we look even further into the future, we are going to see a fundamental change in global container shipping. We have been accustomed to for decades that the main trades were the Asia to North America and Asia to Europe trades. These were the largest trades. They were the main drivers of container shipping. That is going to change. And this is going to change. I tend to call it the Asia-Africa mega region. This is where trade is going to be. What I'm showing you here is something very simple, population growth. Predicting populations, at least if you're only looking 20 years out, is usually pretty accurate. People don't change behavior that quickly. And that shows us that Asia will only reach a peak in population in the 2040s. Africa will continue well beyond that. If there's one major key driver of container volumes, it's the number of people. Even if people don't get more wealthy, more people still means more food to move, more houses to build, more machines to put in, more everything. Just to put some numbers on to make this tangible, the Africa-Asia mega region, if I just look since the start of the pandemic until today, this region has added 350 million people. That's the entire population of the US added just in the last 6 years. From now until 2030, which is only 4 years away, they're going to add another 300 million people. That's another US added just in the next 4 years. And this is going to continue to grow. So if you, on top of that, add the assumption that the African population on average is at least going to grow somewhat in wealth. I'm not assuming they're going to get up to American or European standards. Not even going to assume they're going to reach South American or Asian standards. But let's say they're just going to go halfway up to some of these South American standards. What you will then find is that the trades, for example, between Africa and the rest of the world will be just as material as what we're seeing in the Atlantic trade today. And it doesn't take long before these trades come up and rival what we usually today call the major deep sea trades. So for carriers that are planning their future into the 2030s, their focus is not going to be on the Pacific trade. It's not going to be on the Asia-Europe trade. It's going to be on this intra-Asia-Africa trade. This is going to be the core driver of growth going forward. And that speaks into also the geopolitical complications that we are seeing. Again, we could make a huge list. I'm only selecting a few ones here. Selected Venezuela first. The reason I've selected just to mention Venezuela is it's one of the few issues where, from a container shipping perspective, it doesn't mean anything. The volumes to Venezuela are extremely tiny. Sure, if you're shipping to Venezuela, good for you. But from a global perspective, the volumes are so tiny they're meaningless. There are no transshipment hubs in Venezuela. There are no trade lanes that physically have to go through Venezuelan territorial waters. So it's one of these where massive on the geopolitical scale doesn't really mean anything for container shipping. Iran, as we already talked about, because of its interlinkage with the Houthis and the Red Sea crisis, have massive importance in how 2026 is going to play out. Greenland, I have to mention Greenland, especially since I'm sitting here in Denmark. I'm going to mention two things in relation to this. If this was to explode all over the place the way we saw just a couple of weeks ago, we would be faced with the worst trade war we have ever seen between EU and the US. And I don't think I can stress this enough. Seeing this from a European perspective, I'm not sure it's fully appreciated just how much this has ruined the view on the US, not just from the perspective of government, but also from the perspective of companies in terms of this as a reliable trading partner. Even if this is resolved, this is going to be lingering for quite a long time. Then we have the Panama Canal. That became a major issue a year ago, where the President Trump, for some weird reason, thought that it was halfway controlled by China because of two Hutchison terminals down there. That was then kicked off to the side, presumably because BlackRock and MSC was going to purchase those terminals. That deal is now falling through, not going to happen. That would then have catapulted the Panama Canal up the chain again, except that the Panamanian Supreme Court have now ruled that the concession that was originally given to Panama Ports, who's running the two Hutchison terminals, was unconstitutional. So now Hutchison is being kicked out of Panama. Maersk will likely run this in an interim period, and then it'll be coming out for tender. It's probably two different terminal operators that will get those two different terminals. But Panama definitely had the potential to explode. And then we have the FMC study that got started last year on flag state competition. This could be a major issue as well. The study that was undertaken by FMC is basically pretty simple. Basically says, is there unfair competition on US trade from other flag states? This is not rocket science. Shipping have been competing on different flag state rules literally for centuries. So the answer to that study is, of course, yes. Nobody can be in any doubt that that would be seen that way. So the only question is, what will the US government then do when they have a report saying there's unfair competition from specific flag states? There was also mentioned flags of convenience. We don't know what the government will do, but we can maybe learn from what we saw last year when the US Trade Commissioner basically concluded there was unfair competition from Chinese shipping. That is when we then had all the fees to be put on Chinese ships, which would have been pretty destructive. China then also began to retaliate. Everything was kicked down the road. By the way, keep in mind, these fees have only been paused. They are poised to come back in October 26. And what the US government will then do with other flag states remains unknown. But if we look at the way they have acted over the last 12 months, they are likely to come up with legislation that is both unworkable and detrimental to shipping. This will then take all the headlines for weeks or months and then likely be kicked off somewhere. The only thing this will create is even more confusion. And to maybe sum all of that up, this also goes into where I started with the trade war and all the constant changes. Very early on in the trade war, what I saw companies around the world do was to say, okay, we may not like these new tariffs, but if that's the landscape, where should we move our sourcing to? How should we now adjust our supply chains to cater for this? But then the tariffs changed, and then they changed again, and then they changed again, and then they changed again. So the conclusion everybody has drawn right now is it is flat out impossible to predict what the trading environment to the US will be. What I see countries and companies around the world do now is they spend all their efforts increasing exports everywhere except for the US. This is also what's driving this trade bifurcation we saw in the numbers. And once companies start expending a lot of time and effort in growing new markets, that means growth is not going to be in the markets coming into the US. Companies definitely do want to trade with the US. They do what they can to protect the market share they have, the business they have, but they're seeking their growth elsewhere. And when you look at the demographics chart I showed you before, the growth markets of the future is in Asia and it's in Africa. So this is going to be a very, very long slog in terms of also trade development over time. So in ending here, before we go over to Q&A, we are looking right now at an extraordinarily volatile 2026. We have this likely Red Sea return, unless we suddenly see an active war flaring up between the US and Iran within the next day or two. Then we have all these unpredictable changes from the US trade war and other actions by the US government, which quite frankly now is totally unpredictable. But what is predictable is if we reopen the Red Sea, we will have a cyclical downturn. It will be at its bottom during 27 and 28. Carriers will be losing money during this period. When carriers lose money, we all know what they do. They go to all their suppliers and squeeze them. We want lower rates. They will have more unstable services, and that will basically be the play out. So I was about to say on that happy note, but maybe it's not all that happy. Let me hand it back over to you, Stas, for guiding us through a Q&A.
Lars, thank you very much. Let's talk about the price, the pricing, and what you see as rates going down. You see that you said that the rates will go up. Excuse me. If the Suez Canal opens, that we'll see a temporary blip. If things go according to plan, how long will that spike last?
That spike is then likely going to be short-lived. You might be talking a few months or so. If the port congestion in Europe becomes very severe, it could last a few more months and head into peak season. It really depends on how quickly this backlog then gets cleared. If it's a nice and orderly transition, we should be in good shape coming into peak season. If it's not a nice and orderly transition, this could actually last all the way to end of peak season, which means then you're looking all the way out to September or so.
Very good. And then what you're looking at is an overcapacity situation following that, which should go into 2028. Did I hear that correctly?
Yes, that is correct.
So we should see we will be seeing a rate war going in temporarily, and then the carriers will adjust, but they are in better shape because they all have money, so they won't be as adversely affected as they have been in the past, correct?
Yeah, you can say it changes their motivation for running the price war. It gives them options that they didn't have in the past, where in the past, either they had to sustain their cash flow or they would simply go out of business. That's not they're not pressed up against the wall this time around.
So then I'm very intrigued about the increase in trade with Africa. how much, what are we looking at in the near term on that?
No, I mean, to give an indication, you saw Far East to Africa reach right now is the largest trade going into Africa. It has grown more than 30% year on year. It also did that last year. And you're likely going to see these very high double-digit growths for many, many years to come. All of this is driven by a combination, as I said, of demographics and also of a gradual increase in the average wealth in Africa. That doesn't mean every person in Africa gets more wealthy. They clearly have their problems. But on average, you do see an increase, and that is going to drive trade growth substantially.
Let me ask you about China. What we saw in 2025 was a shift towards Southeast Asia. People were saying they weren't going to be sourcing as much from China, but China's economy continues to grow. Their exports are booming. Their trade balance is very, very positive. Where do you see China in the world market for this year and next year?
Yeah, I mean, let's be clear. This shift from China down towards especially Southeast Asia is mostly a US phenomenon. China's growth to Europe was phenomenal. China's growth to Africa was phenomenal. Their growth to South America was phenomenal. This shift was purely one of the first side effects of the US trade war. Remember when we put these 100% tariffs plus on China, then obviously people were scrambling to try to source out of wherever they could then source goods. That was then Southeast Asia that bore the brunt of that. Those changes were all tactical. Again, the problem is if you are a US importer, how can you plan for the long term? Planning for the long term means you have some idea what's the tariff level going to be from the countries you source from. But the only lesson we have learned over the past 10 months is we can't predict this with any degree of certainty for any timeline.
Okay. The FMC investigation that you talked about, you also related that to the USTR unfair competition fees against China that spilled over into the carriers who had built ships in China.
Yes.
There seems to be a pattern here. What would you say that pattern is?
No, the pattern seems to be, and if this sounds slightly political and people get angry, please speak up. I'm happy to take the discussion. But this seems to be driven by a U.S. government that lives under the illusion that by penalizing other countries, they can force other countries or companies to do what the U.S. would like them to do. As we have seen in the numbers very clearly the last 10 months, that's not how the world works. The intention with the penalties on Chinese ships was to tell companies, don't order ships in China. Ideally, order them in the US. Well, there's not any yard capacity to do it, but then order it somewhere else. If you look at the ordering pattern, people have not stopped ordering at China at all. There is zero impact of that policy.
Very good. Lars, the US dollar has been in decline. It went down almost 10% in 2025, and it figures to go down again in 2026. That should be good for our exporters, but it's going to make imports much more expensive. Yes? So not good news for our importers, right?
No, it is not. The problem here is some of the numbers are simply not adding up. If I look at physical container volumes, and I have very, very high faith in those numbers, they clearly show a decline in the physical import volumes in containers into the US. No doubt about that. When you look at financial numbers, the American consumer has been very resilient during 2025. They keep spending. Those two things alone would seem to tell us that means inventories must be declining. Because if people keep spending at the usual pace and imports are dropping, inventory should be declining. But if you look at the normal inventory stats from the US Census Bureau, inventories are also kept at the same level. This simply does not add up. Something here is wrong. And as I mentioned, I have high faith in the physical volume numbers coming in. The numbers measuring consumption are probably also fairly okay. I have my doubts as to the inventory numbers. Keep in mind, inventories are measured in dollars. If an importer or if importers on average begin to take delivery earlier in the supply chain, that at least on paper will tend to increase their inventories. If they are increasing the value of the goods, maybe on account of the tariffs, that would also inflate the inventory numbers. In any case, that would seem to imply we're heading towards a major inventory problem at some point in time.
And a major inventory problem means what?
Very low inventories. Then suddenly you get the problem, how are you going to fill the shelves? Alternatively, a short-lived spike in imports to restock. That would be relatively short-lived, but as we have seen also over the last 12 months, if you got a sudden spike, like we did, for example, in late May, freight rates can easily go up thousands of dollars from just one week to the next, because carriers have become enormously good at adjusting prices at moment's notice when these things happen.
And all of these trends spell inflation in the United States, don't they?
Yes, yes, they do.
In terms of which regions of the United States that are likely to be more or less impacted, is it uniform, or will it be more Atlantic versus Pacific, or will it not?
No, that would be fairly uniform across the board. And you can say there's been some speculation at times. Will this divert cargo away, U.S. cargo, to suddenly be imported via, for example, Canada or via Mexico? I'm not sure we'll see that to a large degree for a couple of reasons. First of all, there's the fee that comes on from the harbor maintenance tax to try to put additional fees precisely on cargo to U.S. that goes via Canadian and Mexican ports. And if you think back to some of the early tariffs that happened, there were a bunch of importers that were caught short because there was a deadline for when you had to get your goods back into the US, or rather loaded on the ship. If you had shipped from China direct into, for example, San Francisco, you were perfectly fine. Cargo that was also loaded at the same time but routed via Canada, Customs suddenly declared that, well, the way to interpret the rule was if you moved via Canada or Mexico, that was a change of transportation mode. That changed the deadline. So people that routed directly to US, at least for that interim, didn't have to pay tariffs. The ones that routed via Canada and Mexico did have to pay tariffs, to their own great surprise. And here we haven't even addressed one of the other wild cards out there, the looming Supreme Court ruling on the IEEPA tariffs, and what's going to happen if they slap that one down.
Okay, let me open this up for questions. Anybody want to start? I see Peter Friedman. Peter, you are always loquacious. I did not introduce you. Are you there?
Yes, I'm here, but loquacious or not, I'm reluctant. In fact, I'm intimidated when in the company of Lars Jensen.
Oh no, you're never intimidated, Peter. No.
Yeah, I never saw that either, Peter. That must be a new trend.
It was a few years ago I said something and people go, nah, I don't know about that. And then I said, well, Lars Jensen agrees with me. And then everybody said, oh, Peter, you're brilliant. Exactly. Right. So you all discussed, did you discuss a little bit already this situation of ocean carriers charging detention demurrage to parties that don't have anything to do with booking cargo on ships, like the notified parties on the bill of lading, which resulted part of the MSC's a $22 million fine. It's only part of it. Did you discuss that already? I'm sorry.
No, I did not.
You know, I'd like to just say that a number of years ago, we found Maersk doing the same thing. And when I raised it to someone at Maersk on one side of the ocean or another, they took it seriously, and they found that the problem was in their documentation processes, and they seriously addressed it, resolved it, and ceased doing it, resulting in no shipper complaint to the FMC and no action against Maersk at the FMC. So I'd just like to say that sometimes one carrier shows another carrier how things can be done properly. And kudos to Maersk to take in something that was hurting shippers and truckers and freight forwarders and NVOs seriously. So I have high hopes. I've also met the new chair of the Federal Maritime Commission, and she's coming to speak at the AgTC annual meeting in May. But I think we're all going to be impressed.
Peter, while we have you here, do you want to give us a couple of seconds of your insights into the new FMC investigation into the chassis situation?
That one, I would say, is a little complicated. It's a complicated issue. And the question is, can the ocean carrier determine what chassis should be used to? And I don't know where the FMC's bias is on that, but I understand from very good lawyers, you could see both sides of that issue. I would prefer that an ocean carrier not control that sort of last mile or first mile to the ocean carriers. Otherwise, they really control the whole move from factory to final destination, and maybe that's too much.
And that would impact exporters and truckers?
Oh, absolutely. It does. It does. I understand why the carriers like it. I understand the revenue that is generated for them and for the chassis operators. But I think it drives costs up at a time when U.S. exporters need to avoid cost increases for the products that they're trying to get the rest of the world to buy.
Very good. Thank you. Thank you, Peter. Other questioners? Does anybody want to ask a question?
Matthew has his hand up.
Matthew, go
Hi,
ahead.
guys. Hi, Lars. Thank you. Very informative as always. And for what it's worth, from my little abode here in Northern California, deepest apologies for the actions and dialogue around Greenland.
No, over here the joke goes that you guys might then get Greenland and we get California.
Hey,
Brother.
I think there'd be a considerable number of Americans who would think that was just an excellent deal.
Yeah, I would warn you that I think the largest population of Republican voters in the United States is actually in California as well. So be careful with that one. At any rate, what we're looking at with this incoming overcapacity, this cyclical down cycle, and then combining that with the growth energy that the carriers and the shipper companies are putting into trade lanes that do not involve the United States. On the one hand, a down cycle in shipping can be a catalyst for growth for both importers and exporters in the United States. But in the situation you described, it almost sounds like the carriers will retreat from a shrinking market, the US. The low-cost carriers will stay in place, and basically rates will be held at $1 below where you might attract new capacity. So even if the rest of the world sees much lower rates on some of these very competitive trade lanes, in the US we may see a calcification of rates that are good for the liners, but don't necessarily do anything to help spur either import or export trade from US ports.
Nope,
Is that
correct.
Is that a fair assumption? Yeah.
That is a fair assessment. And if you look back over the last 10, 15 years, what actually going all the way back to also just after the financial crisis, what you see, I mean, especially the Pacific into the US West Coast is a very, very good case in point, because whenever rates go up high, you usually see a rapid injection of additional services from smaller niche carriers. They can either be existing or they can be new ones. But the moment we then get over capacity and rates go down, all of these tend to evaporate just as quickly as they came up again. And that's likely what we're going to see again. I mean, these smaller ones, I tend to call them opportunistic, and it's actually not in a derogatory way. They're opportunistic because there is an opportunity to make money. If there's enough shippers that want to pay a decent freight rate, sure, there will be more niche services. But the moment rates collapse and shippers don't really want to pay those rates, then these carriers are also gone because there's no money to be made.
Yeah.
Very good. Thank you. Other questions? Come on, we've got one of the world's experts here. If you've got a question.
We got Peter, as far as I can see.
Peter. Well, we've had Peter. Ann McIntyre.
Oh, sorry.
ahead.
Trying to get everything on here. I'm just curious if you had any additional observations or insights, particular to the Trans-Pacific trade and how it might impact the Port of Oakland and the other ports here locally.
Yeah, no, I mean, you're going to be indirectly impacted by the opening of the Red Sea. I mean, the Pacific is not directly linked over to the Red Sea trade at all, not even the way the US East Coast is, but the impact is definitely going to be indirect, because once all the hoo-ha settles down, we will have the overcapacity. That will lead to increased capacity on the Pacific. If you look at it, the key trade with overcapacity is going to be the Asia-Europe trade. The carriers will need a way to cascade other large vessels. I'm not saying you're going to see 20,000 Ts over to the West Coast, because it doesn't really make a lot of sense, but you are going to see an increase in the average vessel size the carriers are going to send over there. So right now, I still think the average size is between 8 and 10,000 coming into the US West Coast. Look for a gradual increasement up to at least the 14, 15,000 TEU range.
Okay, thank you. Andy Wong. Andy, are you still with us? Andy?
Yep, I'm here. No, I'm actually for once don't have any questions. I'm digesting what Lars was talking about, and I guess the biggest thing is I think for most people is what's the impact to the freight prices, with all these movements going around. I think that's the big discussion in a lot of meetings I'm in is, what does this coming peak season really look like? And us here on the West Coast, we're really very centered on kind of the Trans-Pacific piece. But I guess for me is the question I would come up with is, as these ships go back through the Suez, are we going to see cascading of ships, larger ships going into, the Trans-Pacific trade, or even, more regional trades, as we get into probably summer and into second half of this year?
Yeah. And the short answer is yes, you are going to see cascading. The challenge again for the carriers is you don't really have the facilities on the West Coast to take the ultra large ones of the 20,000 Ts, that kind of stuff. I believe CMA did a trial, a few runs with a 19,000 TEU ship. Not really a smashing success, to put it mildly.
Yeah, I think the bottleneck is that you got to get that ship out in 6 days. So you're somewhat limited to even at a max capacity of maybe 16,000 if they work hard.
Yes.
And so the future for smaller ports, Lars, on both coasts and in the Gulf, if there begins to be this movement that you've been talking about, those ports are going to be especially impacted?
Yes. The challenge for the smaller ports is, again, you're going to see also here a split in trade. If you're the smaller ports, you're going to find it increasingly difficult to attract direct services from the really, really big ships. There will still be opportunities for the smaller ports and niche trades. Obviously, this is more relevant over on the Eastern Gulf Coast with the markets down to Caribbean and South America than it is over on the West Coast.
Gotcha. Thank you. Tina Tan, I see you've been clapping. Do you have a question?
No, not really. I need a lot more time than any one of you to digest all the information. I may rewatch the recording myself, and then I'll come back with more questions, maybe.
Okay, Tina.
Thank you.
Thank you. Okay. I'm going to go one more time for any questions, and then we are going to conclude. Going once.
Stas, I have one question.
Kevin, go ahead.
For Lars. Lars, you're saying, all the vessels and all the buildup, And it's just curious to see that MSC is still just going out and buying every single used vessel that's on the marketplace.
Yes.
And, you know, based upon the forecast, you would sit there and say that they would stop this practice. But I'm just curious, why do you think for them, their strategy?
I think there's a couple of reasons. First of all, again, if you look at the fleet profile, old ships, as I said, are small ships. If we begin to scrap a lot of the small ships, where you're going to see a shortage, that's in the smaller vessel segment. That's where they're buying a lot of the ships. That's one part of it. The other part, I mean, that's my read on what MSC is doing. Keep in mind, MSC is the only one of the global carriers that got to this place organically. Everybody else has done mergers. So they are really good at organic growth. You can either say we're heading into a price war and they're going to lose money. They might also lean back and say this is positioning. It's positioning for the 2030s. MSC right now is in a pretty unique position in the market. They are the only global carrier capable of fielding a large network completely on their own without needing an alliance. And I think they want to solidify that position going into the 2030s. That gives them options. If you look at all the other carriers, none of them right now are capable of fielding a competitive global network with MSC purely on their own. What I see as a dynamic right now is I think CMA CGM is going to be aggressive. I think they will try to also grow to that. Not right now. Again, the Ocean Alliance also runs to 2032. So again, this is a positioning game for the next changeover that's going to come in the early 2030s. None of the other carriers can grow to rival MSC by mergers anymore. Take two of the other large ones. They likely won't be allowed to by competition authorities. So MSC is very much ahead of the game, and I think they want to open that gap even further.
Lars, I want to ask you about COSCO. We have seen the Chinese moving into every market, and we've seen a lot of growth of COSCO investments in South America, Shanghai, in the Cameroons and West Africa, Port of Piraeus, burgeoning port in Europe. China has a strong shipbuilding sector. Where do you see COSCO and its role in container shipping in the next couple of years?
Yeah, COSCO is one of the many vehicles the Chinese government is using for its Belt and Road strategy. And I would also expect COSCO to, I mean, they already also have a very substantial order book, so they will certainly continue to also try to grow and fill their ships. So they are likely to reach the size of MSC or CMA. I believe CMA maybe in a year or so are going to surpass Maersk in terms of size, but they will definitely try to grow more substantially. But you cannot disassociate COSCO completely from the overall Belt and Road strategy.
Okay, very good. One last go around. Anybody? Last questions for Lars? Okay, Lars, I want to thank you. I can't thank you enough. You're a great resource. You're always available. You're always present. Every time I turn around, you're someplace else in the world. And I'm so impressed with how you managed to get around the Falkland Islands. Me and my wife, we were on a Viking cruise ship, but you were all over the place, and your enterprise there is really remarkable, and I really respect that. Also, when you were in Somalia and your analysis about our needing to be concerned about some of these areas that are not always on the radar screen, I think is, from a human rights standpoint, is very, very commendable. We obviously have a very serious situation going into 2026. And as Lars has pointed out, a lot of this is our own making. And if we want to see a different outcome, we're going to have to go in a different direction to get that outcome. You see the trends. People are making their changes, making their investments, going to different places. The demographics that Lars has talked about with Africa they're going to go whether we like it or not. And the question for us is whether we want to continue to be a contender in the international world of trade, and what will happen to us if we don't. So on that note, I'm Stas Margaronis for the Propeller Club of Northern California. Our guest has been Lars Jensen. Lars, again, thank you very much. A reminder for all of you, the Propeller Club has Ann McIntyre on the Thursday, the 12th, and the State of the Port of Oakland is tomorrow. My best wishes to you all, and we will see you soon. Be well and be safe. Thank you.